Welcome to Talking Business, a podcast produced in Melbourne, Australia. The podcast is available on the Acast site, my own website, the Apple Podcast Store, or wherever you go to get your podcasts. Or you can get it at the Business Acumen website at www.businessacumen.biz. For the most exclusive access to leading economists and business leaders from around the world, subscribe to Talking Business from my website, leongettler.com. I am Leon Gettler. My job is to review and monitor the week's news in business, finance and economics. I bring it all to you every week. This is episode number 11 in our series for 2025, and today's date is Friday, April the 25th. First, I'll be talking to Margot Faraci, a senior executive and global leadership expert with over 2 decades of experience in the corporate world. We will discuss all things about toxic leadership, work culture, bad managers, and psychologically unsafe working environments. And I'll be talking to independent economist Saul Eslake about the government and opposition platforms in the lead up to the election and their spending, and how this is all panning out when people are feeling insecure about the impact of Donald Trump. But first, let's talk to Margot Faraci. Well, Margot, what is it about bad management?
Well, Leon, I was a leader for many years in executive land, and I reckon in all that time I had a couple of managers only who I would describe as supportive, interested in my development and interested in hearing from the team. And what that made me do as an employee was stay small. As I became more and more senior in my leadership journey, I tried to be the opposite. But in the end, I found that I was burnt out. And once I had a rest and worked out what was happening, I realised that I had still stayed small in my leadership and hadn't set the right boundaries, hadn't called people to account enough, probably did the opposite of what a lot of my leaders did. So that led me down the path of finding out what my fears were and coming back into leadership with love. So when we talk about bad management, it can mean a whole range of things to a whole range of people, but ultimately it's management and leadership that makes people small and misses their potential, misses them realizing their potential and therefore the business's potential.
But how can managers' superiors, that is people high up in the food chain, pick that out?
In their own leadership, do you mean?
In their own leadership and also further down?
Well, in our own leadership, I always say in the work that I do, first we have to know ourselves. So if we're turning up as leaders frustrated, if we're turning up as leaders saying to ourselves, just do it for the money, if we're turning up not happy with our team, not happy with other people around us, then we're probably operating from fear, and there's probably some work to be done there. In terms of finding out what's going on in your team, what you realise, the more senior you become, is that the further up you go, the less you actually know what's going on, because people are really deferential to hierarchy. And this is a good thing mostly. This keeps us safe. However, it means that people stop telling you things. So what you must do is find out in your team how people are and whether that's different to how they behave to you as the leader. A great way to do that is to hold skip meetings. A great way to do that, the best thing you can do, is be the leader who everyone sees admitting mistakes, who everyone sees asking for help. Doesn't mean you over-index on being flaky. That's not what we're talking about. But if you build what we call psychological safety, we know that's the highest, the single biggest driver of performance. And so they're the things that you can do as a leader, which ensures that people are then going to come to you and let you know when there's problems in your team of direct reports.
But how common is that?
Well, in my experience, it's very common. If you create the kind of environment that says where people see you being open to different views, where people see you admitting your own mistakes, that creates psychological safety, that drives down fear. And we know that's the single biggest predictor of performance. And performance is created when people can speak up, people can have respectful debate, and people can tell you things as they see it. Now, people should come with respect and with compassion and treat other people with dignity. But ultimately, if you're having those transparent conversations, it's reasonably common. I'd like to see a lot more of it, though. That's the mission I'm on.
How common is this lack of leadership?
Well, what we found in the global research I did is that about a third of emerging leaders in the US, the UK and Australia, this is true for Australia as much as it is for the other markets we looked in, about a third of emerging leaders are leading with what we call unconscious fear. That's costing about $2.2 billion in productivity in Australia. If you don't care about the impact on your people, you might care about the dollar loss that you're experiencing because of it. So we know it's really common. And we also know that it was common in my experience. So I set out to do the research in order to see if I could prove it with data, and we can overwhelmingly. And we know that those people who are unconsciously leading with fear are really unhappy as well. We know about half of them are really unhappy in their job. So it's not working for them either.
Are there any sectors that are particularly prone to this?
We looked across all sectors. We looked at what we call emerging leaders. So, between sort of late 20s and into late 40s, that emerging leader cohort, so not necessarily C-suite, but what we found is they're being led with unconscious fear and they're leading with unconscious fear.
But what particular industries?
We didn't look at particular industries. What we did is just look across that emerging leader cohort across 2,500 respondents in the US, UK and Australia. And the answer was the same everywhere we looked.
Is that the same across genders?
Yes, it was the same across genders. What we saw is, we know that fear manifests in a flight, fight or freeze response. So once we uncovered that these respondents were leading in unconscious fear, we looked at what their particular response, so that leads to aggression, bullying, command and control. We know that in the UK, it leads to more of that, what you would expect, unfortunately, from the very polite Brits, is more of that avoidance, so not stepping into difficult conversations, which is just as detrimental to productivity and psychological safety. And here in Australia, we're somewhere in between.
And this is across genders as well?
Absolutely, yeah.
And across age groups as well?
Across age groups as well, yeah. And the major reason people are leading this way is because they don't know another way to do it. And that's the whole mission I am, because we know that fearful leadership is subtle, but it's corrosive, and it can be reflected in overly controlling management styles. So where leaders are micromanaging every aspect, which obviously stifles creativity and autonomy, but it's also evident in a reluctance to communicate transparently, leads to rumours, misinterpretations, and fearful leaders might prioritise short-term gains over long-term employee well-being. And let's be real about this too. We have to deliver results. Like, I've worked in big listed companies where we have to show up and deliver results every quarter as well. So we have to make sure we're balancing that with understanding what's driving us as leaders and how we treat people.
But that also affects companies' performance, doesn't it?
That's right. So what we've seen is, we know that there's this $2.2 billion cost in productivity, and that's just in Australia, from this unconscious fear in leadership. So as I always say, if you're not too worried about the human impact, be worried about the dollar impact. We know that the single biggest driver of performance is reduced fear, and that is psychological safety. And that's actually, if you look at any high-performing team that's performing sustainably over a number of years, it's because there's a high level of psychological safety. Leaders are brave, clear, and fair, and they're happy to be told when they're wrong. In fact, they see that as an opportunity. It's safe to make mistakes, but ultimately we're all aligned on the long-term goal.
Are there any particular industries where leaders are brave, clear and fair?
We haven't seen that. What we've seen though is definitely this link between unconscious fear in leadership and this loss of productivity and a low engagement in people's own leadership as unconsciously fearful.
And it's not particularly Australian, it's right across the world.
It's US, UK and Australia is where we looked at. And as I said, it's this deference to hierarchy that we grow up with that ensures we are kept safe and ensures a sense of belonging, but it over-indexes when we get into the corporate world, and it actually stifles us realising our potential and stifles, importantly, performance of the business.
And it's not particularly pronounced in Australia as opposed to the rest of the world?
We're not seeing that. We're seeing it's about a third of emerging leaders everywhere. So, that means that people are just playing small, turning up for the money, getting frustrated. Avoidance, aggression, bullying, those kinds of things is what we see in leaders. And what those leaders do witness, about 2 in 5 regularly witness decline in team morale. As I said, about half of them are unhappy with their job, and about a quarter of them say that their own workplace relationships are strained. So this isn't working for everyone, and there is an answer.
And what that also means is you're going to get a loss of staff as a result.
That's right. So we know, a fearful leadership environment creates talent churn. Again, if you don't care about the human responses to that or the human impact on that, care about how much it costs, it creates suspicion in politics. It creates, when you're trying to compete in the market with fearful leadership, it creates benchmarking and retrospective. Your attitude to risk is about managing risk. But the answer to fear is love. All the great religions tell us this, that we're only ever motivated by fear and love. And with love leadership, which is the most powerful force we have, We know that you build followership, so people don't leave you. You don't have that expense and that human cost of talent churn. We know that you're seeing possibility with risk management. You're seeing possibility in the market. You're coming up with new things. And instead of suspicion and fear and politics in the environment, what you get is transparency and really strong, respectful debate. And these are the things that will drive performance.
Those are the things that will keep staff.
Those are the things that will keep staff. Absolutely. And what I found that as an executive, I had a big executive career. I was a leader at scale in very public and transparent roles. As an executive, what I found is if I did what I now call love leadership, which is being brave, clear, and fair, and stepping into difficulty and leading with decency, you build followership. People do not want to leave you. And in fact, people are lining up to work with you. And look, Leon, the war for talent's over. Talent won. So we should all care about attracting the best talent, because ultimately that's what's going to get us there. If you don't step into difficulty, which is a massive problem in Australia, if you avoid it because you don't know how or because you think you're going to upset people, then that's when people will lose respect for you and your followership will fall off. That will be costly. That's talent churn.
Well, Margot, thank you so much for your time.
My pleasure. Thank you very much.
And now let's talk to independent economist Saul Eslake.
Well, Saul, the government and the opposition launched their campaigns yesterday, and we see that they're spending a lot, but there are no offsets to what seems to be a budget full of deficits and debt for years to come.
Indeed, the government would probably say that at least some of the announcements that they have made during the election campaign were provided for in the most recent budget in the category that's called decisions taken but not yet announced. And there were a few billion put away for that purpose. The opposition will say that a lot of the policy announcements they've made in the days since their campaign launch will be paid for by abolishing the income tax cuts that were in the most recent federal budget brought down by the government that had come in July 26 and July 27 respectively. Of course, neither of those things cover the housing policy announcements that were made on Sunday, and they and some other announcements will undoubtedly increase the size of the deficits that were forecast in the most recent budget over the next 10 years, unless in the dying days of the campaign, when the parties put out their costings, which they normally do on the Thursday afternoon before the polling day itself, unless there are some significant savings in there, then we have to conclude that the deficits in prospect over the next decade will be bigger than the ones that were forecast in the March 25 budget.
Indeed, the housing policies are interesting because, they're obviously geared to, the electorate's very concerned about the housing affordability crisis and everything like that. But my reading of those housing policies is that they would actually increase demand for housing, which would actually send up prices.
Well, you're absolutely right, Leo. Both parties' policies will put upward pressure on prices, as the housing policies of both parties always do and always have done for the best part of 60 years. We've got 60 years of evidence going back to the first homeowners grant scheme introduced by the Menzies government in 1964, having promised it at the 1963 election at the urging of the New South Wales Young Liberals, whose president at the time was a young fellow called John Howard. Since then, the evidence unambiguously shows that anything that allows Australians to spend more on housing than they otherwise would, whether it's first homeowners grant, stamp duty concessions, mortgage guarantee schemes, shared equity schemes, lower interest rates, easier credit conditions, or, as we'll find if the coalition wins, allowing people to take money out of their super savings to spend on housing. Anything that allows Australians to spend more on housing than otherwise results in more expensive housing and in a smaller proportion of the population owning it. It's not a coincidence that our home ownership rate peaked at the census immediately after that first home owners grant scheme was introduced at the census of 1966 and has been going down ever since then. And at the most recent census in 2021, the home ownership rate among the traditional first home buyer groups, people in their 20s and 30s, was back to where it was at the censuses of 1947 or 1954. These policies don't work. So why do politicians keep doing it? Because although they won't say so, they know that a majority of voters don't actually want the problem to be solved. In a typical year, there are 110,000 people who succeed in becoming first-time buyers. Even if you assume that for every one who does, there are 5 or 6 who don't. That's 750,000 votes for policies that would slow the rate at which house prices are going up. But the politicians also know that at any point in time, there are 11 million voters who own their own home. There are about 2.25 million who own at least one investment property. And the last thing those voters want is governments to do anything that will stop the value of their most significant asset or assets from going up. So, on the one hand, 750,000 votes for policies that would stop house prices going up, 12.5 million maybe for policies that would keep house prices going up. Even the dumbest of our politicians can do that math, and they do. And that's why they keep doing things that make the problem worse rather than solving it.
So the arithmetic's quite clear.
It is. I mean, I don't want to exaggerate the impact of these policies. I'm not saying they're going to cause house prices to rise by 10%. I think the coalition's policies, and that is taking both of them, the super for housing policy, as well as the making mortgage interest tax deductible for first-home buyers who buy new homes, that will have a bigger upward impact on house prices than the Labor's policy of, in effect, eliminating the need for people to take out lenders' mortgage insurance if they can't raise a 20% deposit. That'll have a bigger impact. And Labor's doing a bit more to boost supply than the coalition is. But the effect of both policies will be to prolong and extend the housing affordability crisis rather than to solve it.
And meanwhile, despite the tax cuts, we're still going to be highly taxing the population.
Well, we're going to be highly taxing the population's income. By comparison with other countries, we don't highly tax their expenditure. Our GST is half the rate of European nations and 2/3 of the rate of New Zealand's. And we don't highly tax wealth. We certainly don't highly tax resource rents. So the default option is we highly tax incomes of both households and businesses. And unless we see some appetite for tax reform, which we're certainly not seeing from either side of politics during this election campaign, that's going to continue.
Which will only exacerbate the problems with the budget.
Well, for the most part, yes. Although, as the budget papers themselves disclose, over the longer run, the budget deficit will be gradually reduced by what we call fiscal drag or bracket creep. That is to say, people will find themselves forced into higher tax brackets, and governments won't do anything about that except at roughly 5 or 7 year intervals pretend to offer tax cuts that have been funded by surreptitiously raising income tax over the previous 5 or 7 years.
Which means in effect, they're not really tax cuts at all.
Indeed, but they like to pretend to themselves and to the electorate that they are, and hope that the electorate won't see it and will vote for them.
I mean, this is quite fascinating, isn't it? Because I mean, we're at a stage now where the electorate's quite insecure with the tariffs and Donald Trump on the other side.
Well, true, and they're right to be. They're right to be worried about that, because this is a potentially very worrying development for the rest of the world, especially because the US is seeking to launch an economic assault on our most important trading partner, namely China. What Trump is doing with regard to tariffs on imports from Australia will not be helpful, but the impact won't be very large, especially considering that 2 of our more important exports to the US, namely gold and pharmaceuticals, are for the time being at least exempt from the tariffs that the Trump regime is imposing. But the tariffs and other economic instruments that the Trump regime is deploying against China are intended to inflict pain on the Chinese economy. The Chinese economy is not traveling particularly well at the moment, so it's vulnerable to that pain. And to the extent that China is not able to export as much to the US using the materials that we sell to the Chinese, that will have an adverse impact on the Australian economy, since while the US takes less than 5% of our exports, China takes more than 36% of them.
And Donald Trump typically did a backflip on a backflip.
Well, indeed, and this is part of the problem. It's not just that the policies the Trump administration is bringing in are bad, though they are. It's the chaotic, if not anarchic, way in which they're being implemented. Tariffs are on Canada and Mexico this week. Next week, they're not. Everyone gets so-called reciprocal tariffs this week, then they're suspended for 90 days. Tariffs on China are 20%, then they're 54%, then they're 104%, then they're 135%. But if enough leaders come to Washington to, and I'm quoting Donald Trump directly, kiss his ass, unquote, charming, then the tariffs might not be there at all. How can you make a decision as a business in that sort of environment? Yeah, likewise, if you're a consumer, how can you confidently go out and buy something significant if you're not sure you're going to have a job in 6 months' time? The uncertainty that the Trump regime is generating is probably the biggest single risk of a recession in the United States. And given that the US is still the biggest economy in the world and that many of the world's other economies, including China's, are still a bit fragile, there's a risk that that will be echoed around the world.
And the issue too is that it will diminish the trust in the US.
Oh, that's absolutely right. I mean, the US is engaged in an act of national self-harm that is at least as big for the US as Brexit was for Britain. And because the US is a much more important economy than Britain's, much more significant for the rest of the world. And part of the evidence for that is the way in which the US is trashing its own brand in all sorts of areas, but in particular the currency and the bond markets. As we saw last week, when in the face of mounting uncertainty, which normally results in the US dollar going up and US government bond yields going down, even if the US is the source of the uncertainty, as it was during the global financial crisis, on this occasion, the US dollar went down and US bond yields went up. That tells you that the US is losing some of its long-held status as a safe haven.
And so Trump's initial backflip for 90 days was, well, he basically blinked because of the bond markets.
So it would seem. I mean, you might remember Leon James Carville, the advisor to Bill Clinton, who coined the slogan, "It's the economy, stupid." Also at one time said that if he were to die and be reincarnated, he'd want to come back as the bond market because that way you can intimidate everybody. And clearly the bond market intimidated the self-proclaimed master of the deal, and he backed down.
Indeed. And so that's going to have very interesting impact on our election here.
Well, so it would seem, although both major parties have been trying as hard as they can to distance themselves from Mr. Trump, because clearly, and contrary to what appeared to be the trend through 2024, and as in Canada, conservative sides of politics in particular have discovered that the people of Australia and Canada regard any kind of association with Donald Trump as toxic to their brand.
Well, it'll be fascinating to watch, Saul.
Fascinating in Australia, worrying as far as the rest of the world, and in particular the United States, is concerned.
Well, thank you very much, Saul.
That's a pleasure, Leon.
So what's happening in the news? Well, first, the International Monetary Fund has warned that Donald Trump's tariffs will significantly slow economic growth in the world's major economies, including in Australia, and the US will be hardest hit. The IMF has slashed its global growth forecast for 2025 from 3.3 to 2.8%, and issued upward revisions to inflation in the US and other Western economies. Australia's economy is not expected to escape unscathed, with its gross domestic product, or GDP, expected to only grow by 1.6% in 2025, significantly down from the 2.1% growth forecast by the IMF in January. The worst impacted was the United States, where the IMF now predicts its economy to expand by 1.8% this year, steeply down from its previous forecast of 3.3% issued in January. The downward revision was the largest of any major global economy. The IMF's forecast were compiled less than 3 weeks after Mr. Trump unveiled the tariffs on what he called Liberation Day on April the 2nd. The IMF said the swift escalation of trade tensions and extremely high levels of uncertainty about future policies would have a significant impact on global economic activity. We are entering a new era as the global economic system that has operated for the last 80 years is being reset, IMF chief economist Pierre-Olivier Gourinchas told reporters. And the US dollar has fallen to its lowest level in years as investor confidence in the US economy took another hit over President Donald Trump's plan to shake up the Federal Reserve, which would throw into question the independence of the central bank. White House economic advisor Kevin Hassett said on Friday that the president and his team were continuing to study whether they could fire Fed Chair Jerome Powell just a day after Trump said Powell's termination cannot come fast enough as he called for the Fed to cut interest rates. Powell does not report directly to Trump, so Trump cannot actually fire him. He can only be removed from office under certain barriers, which one would think